Hi smart investors. Today's video will be a little bit longer than normal, so feel free to skip through the chapters to find the content that suits you. Today I'm lucky enough to be talking with Michael Sincere, best-selling finance author who's written over 6 investing books. He has his own column on MarketWatch and he's been interviewed countless times on media outlets such as CNBC. Welcome, Michael.
Thanks for being here, Elliot. Really enjoy it.
Let's get straight into it. With new investors recently entering the stock market, how would you describe options to them?
I would describe options as I usually use an analogy of a house. So if, let's say you had a house, I'll use dollar amounts. If you had a house that was $100,000, I would say to them, you go to this house and you can buy an option to buy that house for $100,000. And it's just an option. So the person who owns the house, if they accept the option, they can basically they can sell the house to you for $100,000. No matter if the house goes up or down, they sell it for $100,000. Now, let's say the house goes to $120,000. You have an option to buy it at $100,000. It means you made $20,000 on paper just by buying the option. Now, you might say, what does the seller get out of it? First, for that person to hold that option for you, for that option on that house, you have to pay them a premium, a bit of money. Let's say $2,000. The seller receives the $2,000. They then hold that house for you. Bottom line, in 1 or 2 months, if the house goes up to $120,000, you have the option to buy it and you can have the house. And if the house drops to $90,000, you lose the $2,000, but at least you don't have to take possession of the house. And here's the bottom line with options. With $2,000, you have controlled a $100,000 house. And if it did go up to $120,000, you could actually sell that option to someone else without even owning the house. You just sell the option. You made $20,000 without ever taking possession of the house. Bottom line, you can do the same thing with stocks. I can own Apple stock, which is very expensive, for just a fraction of the costs. I can either buy it or sell it. Hope you don't mind that long explanation, but there it is.
Not at all. It's an excellent analogy, and it's a shame that options with homes hasn't really kind of taken off as much as options in the stock market has, because it just seems like such a great concept. I've heard of people renovating or renting a property and renovating it and then flipping it before the option expires. But it's not very big here in Australia. Is it popular in America? Options on property?
Yeah. Right. Did you say it was popular in
Not popular in Australia, no.
Yeah, it got very, very popular. I don't know if you heard about what happened with Gamestop recently, because everyone was buying options on it, and some people became millionaires within days. Unfortunately, because they didn't understand options well, some of them lost all the money they had just gained. One thing about options is if you're a buyer, you must sell your options quickly. People never seem to get that point. And so they make a lot of money and then they tend to lose it. And that's why options have gotten a bad name, because someone, there were stories of someone making like $10 million. Now, how much did they put in to make that? I think he put in 60,000 to make 10 million.
It's crazy, isn't it?
But to answer your question directly, it's popular here. It's gotten more and more popular here. Not with everybody, because some people have gotten scared by the stories.
Of course.
But if you understand options well and you can use it as a risk reducing program rather than speculation.
Now, your new book, Make Money Trading Options, Short-Term Strategies for Beginners, is now available through Amazon and Barnes & Noble. It's unique and like nothing I've read before on options. Could you explain how it's so unique and how it's different from Understanding Options, your previous book?
Right. So my previous book, Understanding Options, is just your traditional book, but the difference is probably because I used to be a school teacher, I write in a very, some people say folksy tone, very easy. So my books are easy to read, you'll notice.
Oh,
You're not, right, you're not reading a textbook. So I say that I'm having a conversation with you at the kitchen table. So the Understanding Options did become a bestseller. So I needed a follow-up book. The publisher wanted me to write a follow-up book. And what I realized is in Understanding Options, the first book, I taught them how to trade or sell or buy options. I told them how to speculate, as well as, you know, risk reducing features, but I didn't tell them how to make money. So this book, I was determined to show people how to make money. And I created it by using strategies I thought of myself. And I spent a couple of years testing them out. Finally, I felt it was ready to publish it, and I put it out there. You're one of the first to read it. So
yes, exactly.
Really? That I know of. I mean, people have bought it, but no one's contacted me about it, but go ahead.
In your new book, you introduced some of your own strategies that are excellent for beginners. Could you explain a bit about them?
Yeah, in this book, in this strategy, I call it the test trading strategy. You can actually use it with stocks as well as options. Many brokerages have a simulated or test trading strategy. If they don't, I show you how to get one for free. I give you a link right to it. And what I found is that most people misunderstand how to use the simulated programs. They use it to back test or, you know, just the test. But what I realized is I could use the simulated program to find winning stocks. I found that instead of risking real money to find the winning stocks of the day, I discovered that I could use the test trading program to find me those winners. And that's how I spent a couple of years testing it. And my results for me have been phenomenal. I stopped losing money. So instead of buying something immediately, like everyone does, because, oh, it's going up, let's buy it, or someone gave me a tip, my neighbor just gave me a tip, buy it, you know, we're all fortune tellers. So we bought. I said, no, I'm going to let the test program probe for me. And then each day I noticed, especially in the bull market, each day all these stocks were popping up. There were so many, I had to pick just the best ones. Now that we're kind of transitioning into a much more difficult market, I'm not getting as many winners each day, but I'm patient. So if I get one or two, that's fine. I used to get 5 or 6. So anyway, that's one major part of the new strategy. There's a second part, if you want me to go into that.
Yeah, I mean, reveal as much as you like about your new book.
Oh, I don't mind.
Yeah,
I don't mind at all. I mean, I'm giving out a system. Some people said, if it's so great, you keep it for yourself. Well, I don't have, I thought about that and I said, you know what? I have kept it for myself for several years. I see nothing. It's a simple system. I see nothing wrong in giving it to people and see if they find it useful. But anyway, the second part is I studied technical analysis along with everyone else. And for beginners, especially, technical analysis is very confusing. It's not always accurate. It's great for the people who really understand it. They say how great it is for them. But for beginners, and I was a beginner, it was very confusing. So I created a much more easier system. And I came up with names like Steamroller, you know, more friendly names, but but they're behavior patterns, I call them. So if I see a steamroller pattern, which is a strong uptrend that starts slowly in the morning and starts building, like today, that was a steamroller, but it stalled out. But it did have a steamroller. It's going up over 1%, and it just goes and goes. Anyway, I created 14 behavior patterns, and steamroller is the best. Bullish steamroller, bearish steamroller. If you catch a steamroller, you're going to make money that day.
if you find the winning stocks. Everything is lifted together. When I don't have a lot of time, I only wait for steamroller days and only trade those.
Okay. Now, are you determining this from the pre-market session or during the intraday session?
Yeah, that's a great question. It starts in the pre-market. If it's going to be a steamroller day, if it's going to be a big uptrend, it usually starts in the pre-market. And so I definitely am paying attention. If in the pre-market, the market's up over 1% or down over 1%. But at the open, anything can happen.
Absolutely.
I would say that, so to answer your question, yes, the pre-market sets it up, but that only gets my attention. It has to prove to me that it's a real steamroller day. But I can say this, it almost doesn't matter sometimes if it's a steamroller day, because even on difficult days, there are stocks that do go up a lot, and I do try to catch those. But it's a lot easier when it's a bullish steamroller and everything's lifting together. That's when you can make the most money.
Yeah, absolutely. And how long would you be holding these positions? These strategies, are they, month to month, day to day? How long would you hold them?
Those are great questions. And I had to think of that for so long when I was writing the book, because I had an editor who is a true expert, more than I could ever be on options, and he challenged me. So to answer your question, first of all, when you own options, you do not, my recommendation is never to hold to expiration date. If you know options, you know what I mean. Because the reason that options become riskier is that there's an expiration date. Like, unlike stocks, you can hold indefinitely. At options, there's a time and a date, mostly a day, where it expires, usually the third Friday of each month. It's really recommended you don't hold to the expiration date, because the option, every day that goes by, the option loses time value. The horror stories that you've heard about in the past have been because of people didn't understand expiration, and they held a stock too long. And this is the horror story, and then I'll answer your question. But the horror story is you could have invested $1,000 into a stock without realizing what you're doing, using a sophisticated strategy like a spread, and not know what you're doing, and hold it till expiration, wake up the next morning and find out that you owe $50,000 to the brokerage. Yes. There was even a story of someone, you may have heard the story, I won't go into the great details, but he put a few thousand in and was horrified to find out that he owed well over 100,000. That's the horror story. So don't hold the expiration. Now, to answer your question, with my strategies, I usually say hold for the day. Usually you can make money within one day. Sometimes you can hold overnight. I call it daily, day trading, basically, or daily, overnight. And then, but I almost always recommend selling the position by Friday. I almost always recommend that. I find that I enjoy the weekend a lot better. I wake up on Monday with a clear slate and no worries and suffering over the weekend. Also, I can never, and no one else can, predict what's going to happen on Monday morning. So why should I play a 50-50 gamble when I do much better with a day trade? I should add, day trade has a very bad connotation. I don't day trade in the traditional way. I take one or two stocks at the most. I buy options on those one or two, and I'm done. I don't hold 50 positions. I don't hold all day. I usually am done within hours. Sometimes I'll hold all day though.
Okay. It's been hard for me, I guess, starting with options and really trying to get my head around, no pre-market or after hour sessions for options. So if you've got two or 3 days left in expiration and things are going against you, you're in it, you're going to get smashed on that trade because you've got the time decay as well. and your position's going completely opposite direction than you hoped. And it might have been good up until that point, and then those last 2 days, you just goodbye profits. You know, it's crazy, and that's kind of the risk, I guess, you take on with trading options, is that, you know, things can go against you very quickly, especially if you're not aware of the time decay and how these things can actually affect your options trade. Because of course you want to hold the trade until the end of expiration. Can't mentally, like, you know, that's the point of when I can be right or wrong. But in the real world is that you can't hold it that long without, you know, getting burnt. You know?
No, you're absolutely right. You're absolutely right. First of all, remember what I said. If you're a seller, if you sell options, and that's a great strategy for people who don't like to take a lot of risks, who don't like speculation. You're basically take your stock that you own and you rent it out to other people. You sell the option to the speculators. Yeah. That one you hold to the expiration. But if you are buying, speculating, remember what I said? You should have a time stop, which I introduced in the book. Most people don't use them, but you should. Before you buy the stock, you say to yourself, when am I going to, before you buy the option on the stock, you say to yourself, when am I going to sell it? For me, I always sell by Friday. I do not get into that situation that you just mentioned, where you have 2 days left, because you're done. It's over. The thing is with options, when you get a big profit, you can see 40, 50%, you've seen it. Yeah. And then we all get a little greedy. We go, wow, I can make 50% in a few minutes. Why not hold it for the next 2 weeks? There's a lot of complicated issues like implied volatility, which I talk about in the first book, as well as time value, which make holding that option longer than a week pretty risky. So don't get in a situation where you're holding to expiration. How's that for a rule?
Yeah, it's a great rule, that's for sure. Yeah. People don't really think that, you know, they want to sell that option contract, but they're going to be selling it to someone that has, they're going to be selling it to someone that only has 2 days until expiration. So how are they going to make money on it? Are they going to, you know, exercise their right to purchase the shares? You know, is it that good? So I don't think people think about that aspect either. The on-selling part.
Right, they don't. And that's why I say avoid expiration, and just avoid it, because that's where the problems occur. And that's when a profitable position turns into a very risky, dangerous positions. I have found for years now, by avoiding expiration, by not, if you know options, like basically 1 month to 2 months out is the room I'm giving. So I may have a 1 month to 2 month expiration date. For those who don't know, it means I have to make the money within, I have 1 month or 2 months to make that money. The direction has to be correct. But even though I have 2 months to do it, I still sell within a week. Yeah. Don't be fooled by that 2 month time that you have. It's caused a lot of trouble for people. It's better to take the money when it's right there in front of you. You can always do it again tomorrow. Exactly. Yeah.
And like you mentioned in understanding options, that it accelerates the closer it gets to that expiration date as well, which is another trap that grabs people.
Oh yeah. Anyone who's been there, and I've been there, of course, you think you have to not think like a stockholder who has time. Exactly. Options is a whole different animal. You take the money when you can, like the people in Gamestop, when they made hundreds of thousands of dollars. And I read on the boards, I'm never selling this. I'm holding it forever. Good luck with that. They lost all their money. Options, especially, even, I call it selling at the extremes. Yeah. When you have a huge profit, and suddenly out of the blue, let's say you're holding call options, which means you believe the market or a stock is going to go up. And all of a sudden, out of the blue, the market explodes higher. There's like good news. And the market explodes higher. Guess what? you could get greedy and think it will last forever, or you can take at least half your profits right off the table right there. And same with the other side. If you have put options, which means you believe market will go down or a stock will go down, especially with puts, if you make a big gain, the market, almost crashes that minute or that day, take the money or half the money off the table.
Yeah. Now, calculating entry and exit points is something most retail investors struggle with. Greed and the mental aspect play huge factors for all of us. How do you manage your entry and exit points with your trades?
That's a great question. One that I've had to struggle with many, many times. Now, the technical analysis can help in that aspect, in that if the only technical indicators I use really are moving averages, which I think is great. And because when a stock hits the 100 or the 50 or the 100 or the 200 and goes below it, you got problems. But often it hits it like it did today. The indexes hit the 100-day and then bounce back up. If you are a really good market timer, you could buy them. Truthfully, I'm not a good market timer. I'm probably the wrong person to ask how to enter and exit, because I just don't get it right. That's why I follow trends. I follow the market, and I'm never early. I'm always a little late, and I always sell a little early, but I try to get that in the middle, and I'm just happy for the middle. But no, you'll never get me early because I'm a terrible timer. And I'm always trying to sell a little early too, because boy, when I see that money sitting there, I'm going to grab it. Oh, sure, I may have been able to make more money if I held it longer, but maybe not.
I think a lot of us are in that boat where we're buying too early and selling too late. Definitely
right.
Experience.
It's very difficult. It's, I used to do that strategy, and that's why I developed my own trend following strategy. And I'll just go back to it. I let the test system tell me which stocks are trending higher. Now, it's like a horse race. Many of those stocks that I picked out early are trend higher right at the open, and then they fail. Thank goodness I didn't put real money into those. So I wait for the ones who really look like true winners. And yes, I do buy them a little later. Not everyone will like my strategy because you are buying a little later. You're following a trend.
Yeah.
And I follow the market. I no longer try to time the market because it's very difficult to get it right. Very few people can time it exactly.
Very nice. Now, while we're on technical analysis, there's always been kind of a war against, fundamental analysts and technical analysis. Which one have you found most beneficial for your trading?
I always tell people to use both.
¿Por qué no los dos?
But for our type, you use both in that I can say fundamentally a stock like Apple and Netflix fundamentally are really strong.
Yeah.
That is a great asset. That is excellent that you're picking a really strong stock with great earnings. So from that end, from the earnings standpoint, that's strong. Now, on the other hand, Amazon, which is one of the great stocks, didn't have earnings for many years. Many years. Only recently did they have earnings, and yet their stock still went up. So, but to answer your question, of course, I would go a little more technical, but I still will take into account fundamental analysis. The problem that I've seen lately is that both fundamentals have been ignored.
Yeah, absolutely.
If you go by fundamental analysis, we're at PE levels that are sky high.
Exactly.
How useful is that? I remember when they said, "Oh, ignore the PE." Well, so I don't know how useful it is right now. If the market crashed, maybe it'll be useful again. But the fundamentals aren't as useful. Now, technical have also had a rough time of it too. like there has not been a great trend, especially lately. So you're getting all kinds of mixed signals as well. And oh, by the way, many of these stocks are so overbought. They're at levels that are obscene, like at over 90 in the RSI, which is statistically ridiculous. And yet they still go higher. So even technical analysis is having difficulty. It tells me I think we could be in a bubble, but I can't be sure.
Yeah. I mean, you got fundamentals and you got technical, but at the end of the day, it's what the crowd consensus is and whether or not they think it's the price it should be. I mean, let's look at Tesla. Of course, that's, fundamentally, it shouldn't be anywhere near the valuation that it is based on its stock price, but yet it still powers, based on that future growth potential. And that's just one of the many stocks, like you said, that's just significantly overbought. So this pullback in the market is definitely well and truly due, and we're probably just seeing the bit of the start of it. It can only get worse long term.
Yeah, absolutely. But keep in mind for your readers, because I've studied bear markets for years. I study them very closely. There's different types of bear markets. I mean, there's always going to be one, and I do believe we're closer to one. But remember, there's the ones where they go down really fast and everything's over and then everything goes back. We actually had that in, I think in March.
March last year, yeah.
Yes. That was the lucky one. The worst ones are the ones that go drip, drip, drip down. But remember, even in a bear market, even if we start drifting down, there can be these knock off your shoe rallies that if you're buying puts or shorting, you will get smashed. And so you got to be really careful when you are buying puts. Now, I do not ever recommend, I shouldn't say ever, I don't recommend for beginners to short the market. That's how you can go bankrupt.
Yeah.
When you short the market, betting that it's going down with stock, we call it selling short. You're selling something you don't own. When you do that, you are taking a huge risk. Buying put options is less risky, because the most you can lose is what you put into it. When you sell short, you can lose more than you put into it. Very risky strategy. Yeah. So I wouldn't recommend that. I have found that, shorting and bear market strategies are more challenging. I'm excited about it since I can add it to my books, because I've been waiting 10 years for the bear market to come. I can't, and don't ever try to predict one, because you never know when they're going to come.
Now, how do you manage volatility with your options trades?
That's a great question, because in the first book, of course, I talk a lot about implied volatility. I only give a crash course in the second book. I don't know if you got to that point, but there's for anyone who doesn't know anything about options, I actually included a like a 10-page primer on here's options if you know nothing about it. And I do talk about volatility. So with the strategy I use, I like volatility. I like volatile stocks. Volatile stocks that are going up or down is great for speculators. And it's great when the volatility increases on the way up. That's where you can really make money. On the way down, volatility, it increases by tremendous amounts, and which is what can destroy, the longs if we start going down. If you don't like to speculate, the selling covered call strategy is great. In that strategy, volatility is really low. You like low volatility. That's great for people who don't like to take risk. And it's a wonderful strategy. You are selling a option on something you own, not naked, which means you don't own it. You're selling something you actually own, a stock you own, and you're renting it out. But volatility, I'll just say this. You must understand the word implied volatility. That's how people really get destroyed. They own a stock, let's say call options. It's going up, up, up in the right direction. And then they lose money on it. And they're like, what? It went in the right direction.
Yeah.
But I lost money on it. That's because of something called a volatility crush. They bought too high. They bought the volatility. They bought the price too high and didn't realize that it was volatility that made the price go up. And they bought it at a very bad price and it got crushed. So my question to you is, yeah, I love volatility, but you better understand it before you trade options.
Yeah, absolutely. And I mean, a lot of people probably don't as they're starting out, this whole volatility thing is new. It's, it's not something that's in stocks. It's easy to get burnt by it, that's for sure.
Yes. And I'll just say that that's why I have learned strongly that if you're a beginner, you should absolutely use the simulated test programs. And again, I mentioned one in the book that anyone can use anywhere in the world. You can use it. And I recommend you're allowed to use it for 60 or 90 days for free. And I recommend practicing, especially if you're doing options before going into it. Like many people, I just got into it. I started with selling cover calls and was making money every month. This is easy. It was great. And then I went into speculating, and that seemed easy too until I lost money.
Yes.
It was like unbelievable how easy it was.
Yeah.
And then I learned about implied volatility. So now I can write about it because I experienced it.
Yeah.
I'm not like a professor who's saying, do this, do that, and doesn't really know about it. I know. I have felt that pain myself. Yeah.
Michael, do you have your next book already in the pipeline, and what can we expect?
I actually have 2 books in the pipeline. Can you believe it? One is I'm working on am I allowed to say this? I guess I am. I wrote a book. I wrote Understanding Options.
Yes.
But I also wrote a book that was a bestseller called Understanding Stocks. Yeah. So I'm rewriting that book from scratch. It's so a lot of copy for people who don't like. It basically tells you all about the stock market for beginners, and it's done very well. But I'm rewriting that, so that's not really a new book, but it's a rewrite. And then I'm writing another stock market book that is going to use some of the same strategies, but this time I'm aiming for stock traders rather than for option traders. And I'm going to include a lot of information to help stock traders. So those are the 2 books I'm working on.
Excellent.
Right now. Yeah.
Good. I mean, there's a lot of new investors that have obviously entered the market over the last year, and I don't think a lot of them know what they're doing. So I think your books would be highly beneficial for them at this point.
Oh, thank you very much. I realize that, especially with options, you really need to know what you're doing. It's, the stock market is, if I was going to tell a beginner what to do, because I get it all the time from friends and people I know, acquaintances, they always ask me, if you know nothing about the stock market, just start with an index fund. Just buy a few shares of an index fund and add to it every month. You're paying yourself first. Instead of paying a credit card, it's reverse. You are paying yourself first. It's compound interest. That's what I learned from Bogle. Yeah. And it doesn't matter if the market's going up or down. You just put in that monthly amount. You put that monthly amount. It doesn't have to be a fortune, but you put that in. And the idea is that even if we go into a bear market, eventually we get out of it and the market goes up. And but thank you very much. I would say to beginners, I would say not only start an index fund, but if you're going to do options, is to practice, use the practice system as long as it takes until you feel comfortable with options. There's no rush. The market will be there when you're ready for it, So that feeling that I have to buy right now, that's a little scary for beginners. I have to buy Bitcoin today at 50,000 a coin right now. I must. I'll mortgage the house. I'm buying it.
Because I read an article and they said it's going to $1 million.
Yeah, my neighbor. I have a great story about my neighbor. When it was $350, he told me to buy it. $350 a coin. That seems high. And he didn't buy it either. When it got to 3,000 a coin, and I went to his house, he showed me all about Bitcoin.
Yeah.
I'm like, where is this coin? It's in my computer. What? Anyway, it's in my digital wallet. And this was a few years ago. I'm like, this is crazy. And 3,000 a share. The guy put 60,000 into it. He said, I'm putting every bit of money I have.
Wow.
It goes from 3,000 to 20,000. He calls me up. I'll never forget. I'm buying a Lamborghini. I'm rich. I have 300,000. You can't believe. I'm the king of the world. You know, do the math. He had a huge amount of money.
Yeah.
Within a week, it plunged from 20,000 to 6,000.
It's not about money. It's about sending a message.
Yeah.
He was devastated. I lost contact with him after that. But as you know, now it's 50,000. He moved. That's why he ended up moving and didn't talk about Bitcoin for a couple of years.
Of course.
But now, yeah, it went from 20,000 to 6 to 50,000. Do
Yeah.
I know where it's going to be? No, only a fortune teller does.
Now, Michael, what do you think is an important question, but you're never asked?
It's so funny because that's the exact question I ask every person I interview. I'm usually the person who does the interviewing.
Okay.
So the answer is you just asked it. I've never asked that question. So this we could go in circles on that one.
Okay.
But let me see. What question am I never asked? You know, it's funny. All the people I interview always come up with one, but I can't. I'm blank. I have to be honest. Yeah.
That's all right. I do have a couple of extra questions if you've got time.
Sure. This has been quite enjoyable. I don't mind at all.
Thank you, Michael. With the knowledge you have now, if you were starting out with 5,000, what would you do differently?
I know we're entering into a very difficult market. I would diversify it. I definitely put about 1,000 into an index fund right away. And whether the market's up or down, and I would try to force myself to put $100 in each month or whatever I felt was a comfortable amount. So I would diversify that. I mean, first of all, Chris, you take care of all debts and everything. Don't be in the market. If you don't use the stock market to pay off debts, that can lead to a disaster. You'll end up losing the money and you'll owe the money. So assuming I have no debts and I have a free amount, I think you said 5,000. So I'd take 1,000 or two index fund. I would hold another couple thousand for cash. And then I would take 1,000 and probably open up an options account, but I would study the options market. So I would speculate with a part of it and I would invest a part of it. I would do both. I would diversify. And then I knowing what I know now about the market, and I know we're going to go through difficult times, I would definitely have a chunk of cash. I'd probably do it this way: 3,000 cash, 1,000 speculation in options, 1,000 in the index fund. And the only reason I'm keeping that much in cash is because I know that the market is at all-time highs. We're overbought. And I know that difficult times could, I can't say when, but could come. So.
Yeah. I mean, last year, just after March, let's say April, I mean, I felt the market was overbought. I mean, we went through a global pandemic. And the market was, I don't know, had an amazing year, I guess. So it was just mind-blowing for me just to try and comprehend why that was happening on an economic scale.
Yeah, it's shocking. And listen, I talked to some professional traders who've been in the business for years and years, one like 40 years. He said he's never 40 years he's never seen such an overbought market in his life. He says when this thing unwinds, it's going to make 2008 look like a kindergarten program. I mean, but guess what? The market still goes up. But here's a little clue. Watch interest rates in the States. I'm not sure how your interest rates are, but ours are very low. If interest rates start to go up, if inflation rears its ugly head, which there are hints of it, then we will have problems. I think it's the low interest rates that are keeping people buying houses and also buying stocks. Yes. What's happening with you?
Yeah, I mean, interest rates are really low here at the moment. Property is just skyrocketing. Just people are just getting and paying whatever they can get because the housing demand is just so strong and the supply is just not there. We've got a lot of people that are moving up from Melbourne and Sydney up to Queensland because the lifestyle, they can get things a lot cheaper as well. And yeah, the market is just skyrocketing. And I mean, banks are probably going to love it in a few years when they start to collect, I guess. That's what I would call it. You know, when the interest rates go up and people can't afford it, the banks come in, and then that's when they make their money.
Well, yeah, I live in South Florida, and we have the same situation. Everyone is coming. I don't know if you heard, everyone's coming to South Florida. I've never seen anything like it. The realtors call all of us all the time. Do you want to sell? Do you want to sell? There are so many buyers looking for property. It's incredible. So it's an extremely overbought situation. It never ends well, these overbought panics. They never end well in history. So I just, especially with the stock market, when people start frantically buying anything that moves, and same with the houses, it does not usually end well. But yeah, I was going to say, I'm not sure of your system, but if you're going to buy houses at these low interest rates, you don't want to do a variable. I mean, I'm not an expert, but you want to do a fix, because you're right, those interest rates go up, and anyone who has a variable mortgage will be in trouble if interest rates start going up. Yeah. So someone locked in, I heard of someone locking in a 2.1% interest rate, which didn't last more than just a few days, and then it popped back up to 3. But that was incredible that someone locked that in for 30 years.
Wow.
What I don't understand with credit cards is if you buy a new credit card, even if you have good credit, they're going to offer you 23% on that card. And yet, if you want to borrow money, I mean, how does that work out where you owe 23% on a credit card and interest rates are at 2%? I mean, something is really not right there. Exactly. But that's another discussion.
Now, something that's really big here in Australia is buy now, pay later services. Are they exploding over there in America as well?
Buy now, pay later. Boy, they've been doing that for over 100 years, as I recall.
I know. Right? You've seen through the facade of the new advertising, right? It's the same.
Right. I mean, I did a study of the 1920s. Remember, that was the big bear market. And what got everyone so excited in the 1920s, which fueled the incredible rise in the stock market, was that new concept called buy now and pay later. And people were buying things that they couldn't afford anymore. I mean, they finally were able to buy things like washing machines and things like that. It was a miracle. And cars. So yeah, that got popular in the 1920s in the United States. So, but yes, we've always had that. And what they, for instance, Apple, if you buy an Apple computer, they actually charge you no interest. So it really is a pretty good deal. So you just pay a monthly fee to them. You get the computer and you just pay a monthly payment of $80 or $90. You keep the item, no interest. That's become popular, at least with Apple and some other stores.
Wow.
Yeah.
We don't have that here yet. But that
okay. Yeah. Some charge interest, obviously, but a lot. But the stores have lowered their interest here. So anyway, it's a little off on the stock market, but it is interesting from a financial viewpoint.
Right. So we've got two really big buy now, pay later services here in Australia, Afterpay and Zipco. So Afterpay was $8 in March, and now it's probably around $150 Australian. So it's big money, and a lot of people are very bullish on this sector, but I don't understand how it's any different from a credit card personally. It's
a credit card. Yeah. And I can tell you from knowing friends and family, and when I was younger, don't get into credit card debt. That will just destroy you. It will, you do not want to get in. I mean, it's easier said than done, right? And it's easy for people, but you should work. And that means, and this is hard for Americans to do, that means cutting expenses. That means not going to all the great restaurants and partying as much. It means cutting things that are not as essential, but do anything to get out of debt. That is probably the best advice I can ever give anyone. And then when you get out of debt, then you can start paying yourself by getting into the stock market. You can reverse it, because it's like compounding interest is how you can get wealthy, by buying those index funds. But with stock market, with the credit cards, you're doing compound interest in reverse. It keeps compounding and compounding, and it's almost like, and if you don't get a hold of it, it will, the amount of money that you owe would just be ridiculously high.
Yeah, it's very hard to come back from, that's for sure.
Yeah, but you're right. It's a credit card with another name.
Exactly. Smart. I've got to give it to them. It's smart that they've been able to make so much money out of it.
It's a marketing scheme. It's brilliant. I remember when, I'll just say there's a lot of marketing schemes, and I'll just leave it at that. It's a marketing scheme. Be careful. Just pay your debts if you have to. Do you really need do you really need that item now? Do you have to have a new computer now, or can you wait? Can you live with that old computer for a little bit longer?
Yeah.
Until you can afford it? That's, the credit cards are just so easy. It's so easy to, just put in that card, get the item, and then you don't think about what you owe. You don't even think about it. It's a big psychological thing. And I'll just say this: I've had people call me or write me emails. Like I remember one 7-year-old man who wrote me and said that he's working 2 or 3 jobs. He's broke. He wants to go into the stock market to make a lot of money to pay off his debts, because he's really worried. And he made a lot of mistakes. And the people who are listening, I hope they don't get into debt. That's all I can say. It's, like I say, it's easier said than done, but you got to attack it when it's small before it gets overwhelming. And these schemes that you're talking about are an easy way to get people into debt if they're not careful. Buy what you can only afford. That's what I say. Yeah, go ahead.
Just a bit of a side note. I made a video on debt explaining the risks and what to be aware of and how to manage it. And it's probably my lowest rated video, because people that are in debt or have a problem with debt don't really go out and want to look for information about it. The people that should be watching it, they probably never will. So it hasn't done very well. But that's, looking back, I can see why that's the reason that no one's watching it, because people that need to, they haven't.
I think you're right. Someone approached me about a book on the side that was called how to use that debt is a good thing. There's good debt and bad debt.
Exactly.
And it was I'm glad I didn't do that book, but it was like using other people's money to buy houses. You know how that worked out so well.
Yeah, exactly.
I'm glad I didn't write that book. But yeah, there are instances of using debt properly.
Yeah.
To build a business and education, something to benefit you. But you are absolutely right about debt, and it's a shame that people aren't paying more attention to that. Exactly. To that video. Send me the link. I'll read it. I'll look at it. Because, I think it's really, but I learned myself, that to get out of debt, just attack credit cards. I am obsessed with getting rid of credit card debt. Make sure I don't have it. Make sure I pay the bills. That's almost an obsession of mine right now. So
yeah, no,
and I'll just add another thing. I'm not even sure if you use it, but if you do, I'll say that another thing that I learned that really helped me tremendously, I got very fortunate, is that I was able to pay off my house. They tell you, oh, don't pay off your house and all this. No, pay off your house. You don't have to work as much anymore if you pay off your house. You're living for free. Yeah. Pay off your house if you ever get that opportunity. That's some advice. If most people don't get it, that opportunity, but if you have the opportunity to pay off a house, do it if you have that opportunity. I was given a lump sum of money and I could have put it in the stock market. I could have done all kinds of things. To answer your question, I paid off the freaking house, and it was the smartest thing I ever did. I mean, so if any chance you get that, like these people who make all this money in like GameStop, take some money off the table and pay off a house or buy a new house, do something with it, diversify. Anyway,
Yeah,
man,
you can tell that they're just all in, right?
they're all in.
That's everything I've got.
Yeah, they're all in. They've become gamblers, not traders. They really, if you don't believe me, go on the Reddit board and read about it. And it's unbelievable the thousands of people writing of all the money they lost in GameStop and everything. They made it and lost it. And one guy who said he lost 500,000, he's, in deep trouble. Anyway.
The thing I don't like about it is that they make this big song and dance like, oh, we're taking down the man, we're going to make him pay for shorting this stock and, he's going to lose money. But really, it's this person who, is promoting it on Reddit. He's making all this money while everyone's pouring in. Then you can see it, it's starting to flounder. He starts shorting it and, he gets rich again. So
right,
someone else at the top, right?
Yeah. I don't know if they were smart enough to short it. I don't know if they were that wise, but I know who made a lot of money on it. Yeah. The first guy made a fortune when he promoted it. I don't know if he shorted it, but he sure made money on the way up. And the ones who made the most money were the people who owned GameStop. They were in shock. They had stock options, everything. They were like, they sold their stuff within 2 days. They had millions of shares. They sold. They said, this is a miracle. I can't believe it. And they sold and did very well. But the ones who lost were the ones who came in late.
Of course.
And stayed in too long, right?
Yep.
Yeah. They always get burnt. We used to call this pump and dump. That was a pump and dump scheme.
Absolutely.
Yeah. No other word for it, but pump and dump. Very dangerous stuff. I mean, it went up 1,500% within a week. Yeah. But of course, now it's down to pennies. I mean, or no, I shouldn't say it. It's about 40.
No, you're wrong, Michael. You're wrong. Have a look at GameStop. It's up to.
I haven't looked at it lately. I had it on my. It was 40 or 50 recently. The other day, I believe. Let me see.
No, it's like 260 plus.
Oh, it went back up again?
Yes.
Oh my gosh. Okay, I'm wrong.
Oh,
there's got to be a lot of sad people out there who sold.
Right.
Oh man. Now, and that's one of the problems with options. When you wipe out an options, you can't get your money back. It's gone. Like when the time runs out, you're gone. At least with stocks, you're able to hold through this awful period. Absolutely. If you were smart enough, right? I mean, yeah. If you were smart enough and had enough guts to hold, then you could have come out of this.
Yeah.
But I'm sure a lot of people lost everything when the expiration date hit and they lost. Goodbye.
Exactly.
250. I'm not touching that.
Yeah. Crazy. I'm shocked that it has gone back up. I can't believe that. It's
me too. And that is the reason why I created a strategy, because I can't predict these things. I cannot. It makes no sense. There's so many things that make no sense. Like you mentioned Tesla.
Yeah.
I mean, who own, a few people own Teslas. Do they even make any money? I mean, the fundamentals, I believe, are pretty bad. And anyway, the people who are trying to use common sense, like with Tesla, and use the fundamental analysis and said there's no earnings, and they shorted it.
Exactly.
They got completely wiped out.
Yeah.
Those people, right? I mean, so the market is very emotional and very unpredictable.
I don't know how long you've been watching Tesla for, Michael, if at all, but I held it for about probably from about 4 years ago. I bought in about 320, just $10,000.
Wow.
And so last year they were announcing their first quarter for the year, or might have been 2019, and I sold out at 800. I sold out at 800, and
nice.
Well, kind of. I thought, look, I'm going to take profits off the table. I'll buy in when it drops back a little bit, because I'd been watching the price action. The whole company was up and down. Elon was posting things on Twitter. It was absolute disaster. Anyway,
Right.
so then they announced their earnings. It was okay. It went up to 880 and then pulled all the way back to like 780. After that, I was waiting for it to drop a bit more. After that, it was game over. It was nothing but just pumping up. And this is like during middle of COVID, where who's buying cars during COVID, during lockdowns and a global pandemic? And this stock, basically a car manufacturer, is skyrocketing. And I just couldn't believe it. And yeah, so I just lost all that potential of that, huge rally from a company that fundamentally wasn't there. And I knew that. So on the inside, I knew I'd made the right decision to pull my money out when I did, but the market didn't care for that at all.
Yeah. But now it's at 673.
Yeah, it had a strong pullback over the last couple of weeks.
Yeah.
But
See, you can never win.
That's it.
It's hard to predict it. I mean, I think you getting out at 800 was a great move. That was brilliant.
Yeah.
And I don't care about it going up more. I don't care about that. There's always another stock that you can find. It never bothers me that I sell something and it keeps going up, because there's a million stocks like that.
Exactly.
But I know people who, the ones who really are mad are the ones who didn't even buy at all. I know someone who saw the potential of Tesla. She was talked out of it. Now that person's really mad. So her whole life, she's mad that she never even bought one share. At least you got in and you got out with a profit.
Exactly.
I don't really care how much of a profit you got out with a profit. That's all that matters. Yeah. Go on.
Exactly right.
Yeah.
One last question. What are some of the most important lessons you've learned along the way?
Well, some I did cover. The most important lesson of all is to cut your losses when you're wrong. You don't hope, you don't wish, you don't think. You set up in advance a level of how much you're willing to lose on that position. I don't care if it's $100 or $500 or a percentage. Usually I find a dollar amount is more useful. And when it hits that, you pretty much sell. So cutting your losses is the most important. I also learned, and the whole reason I wrote the book is I learned that I am a terrible predictor. I just can't predict consistently. Yeah, I'm right here and there, but not enough to where I want to put money on it. So that's why I've become and turned into a trend follower. The other lesson is, as I mentioned, I'm kind of covering what I mentioned, but the importance of diversify. You don't want to put all your money in one thing. You want to have, stocks, options, real estate if you can afford it, or your home. So diversification, really, really important. The other thing I learned is to try to not be emotional. It doesn't bother me if I sell something and it goes up another 20 or 30%. I'm not emotional about it. It's I try to keep my emotions down. When I get emotional, I make mistakes, and then I realize I might be gambling, not trading. Trading's not supposed to be fun all the time, like a video game. Mm-hmm. It's a business. It's the goal is to focus on making a profit and not be obsessed with becoming a millionaire or get rich fast. So those are some off the top of my head. Yeah,
no, those are great. I completely agree. Setting up a predetermined loss when you enter that trade that's super advantageous, because once it's moving, you're like, oh, I'll just hold a little bit longer. I'll hold a little bit longer. And it just keeps falling and falling and falling. And then you're stuck,
Right.
Okay, down 50%, I need to get 100% profit just to break even. I'll be okay. And then it continues to drop, and then you're in a world of pain. That's for sure.
Right. I could add another one that is for beginners. It's been so long since I did this that I almost forget it. But don't go on margin. Margin's like a credit card. If you have $1,000, the at least in the United States, they give you another 1,000, so you can buy 2,000. but you borrow $1,000 from the brokerage, and at low interest rates, but you still borrow from them. And that means if you're wrong about that stock, you not only lost $1,000 in gains, but now you owe $1,000.
Exactly.
So I tell people no margin. I got one margin call in my life, and that was the last one. Because when you owe the money, they call you up and say, we need we got to sell your stock or give us some more money.
Exactly.
And that was the end of the margin for me. That was a long time ago. So I sleep very well at night knowing I'm not going to get a call in the middle of the night from one of the brokerages saying you owe money.
Exactly.
Right? But you're right what you just said about the cutting the losses. And you can also do it for gains. You can say to yourself, how much gain am I willing to awaken?
Absolutely.
Also, when selling, it sounded like you were struggling with when do you sell that it makes you mad that you sold and it goes up. Why not sell a quarter or a half?
Yeah.
And then take your profit and then let the other half run longer and see what happens. How's that for an idea? Yeah.
Yeah, it's a good one. That's for sure.
Yeah.
Michael, it has been an absolute pleasure being able to interview you. Understanding options truly solidified a lot of fundamental concepts that I had struggled to grasp over years. Being able to take complex ideas and simplify them into real-world scenarios in a unique and interesting way is an absolute gift. Your new book, Make Money Trading Options, has been no exception, providing detailed tested strategies and answering a lot of the questions that I had after your previous book. Thank you for joining us today and taking the time out of your busy schedule to help explain some of the things about your new book and give us a better insight into some of the things that you've dealt with over your time with trading options.
Thank you very much, Elliot. I really enjoyed it. This is one of the best interviews I think I've done. So I really enjoyed it tremendously. Yeah, you had some really great questions.
Thank you.
And I can tell you one thing, you're the first interview I did on this book, but definitely one of the best of so I usually do the interviewing, and I can tell you you've done an excellent job. The questions are excellent.
Oh, thank you, Michael. It's
Sure.
I couldn't have thanked you more for taking this time, because it's really been an awesome interview and I've learned a lot from having this discussion with you today. It's been really enjoyable, Michael. Greatly appreciate it.